guys, I'm Michael Glass from michaelglass.com, and I want to thank you for taking the time for watching our video. As always, we'd like to start off with our disclosures. Any symbols you see today should not be inferred as a trader recommendation. No matter what form of investing you choose, stock, forward, futures, options, there is a lower risk associated with them. You can lose your money. Any symbols and strategies we talk about today are for educational purposes. Future results are not guaranteed. And most importantly, trade at your own risk. Any decision you make is solely your own responsibility. So as a part of our weekend stock market review, we like to go over a couple things. We want to look at what happened last week and what are some key events. We want to identify our key support and resistance levels, not only for our market leaders, but also some of our internals like dollar, gold, and crude oil. We want to see what we should watch for this week in terms of market news and what could move the market. And finally, we always like to throw in a little education spotlight in so that you can grow better from week to week. So let's begin. When we look at what happened last week, of course, we start off with the big push down. The market, all major indices are down over 2%. Some concern about the valuation of stocks. And what I simply mean by that is, we talked about this last week. All three major indices were retesting the highs. What is the validity in that? Can the market keep going higher? It certainly could. It may not. Only time will tell. So there's certainly some profit taking going on there as the market retested the highs. And the only reason I'm going to bring up as far as overseas news, the Iran nuclear deal, you guys know in all my videos I don't get into politics. That's for another day. But what I will say is oil. If we do get this, what is going to be the effect of oil? Now, oil went down with the rest of the market, so maybe it just went down because the market was down. But I do think Iran does have some oil, the Middle East oil, so I do think there's some reason to pay attention to that as a trader. All right, corporate news. Where did it all go wrong? Well, we did have an update on Monday, but we pretty much went down from there. Apple, it did beat expectations, but not by as much as people wanted. Some investors wanted, and that's where the market really. Apple was after the market closed on Tuesday, and the market really went down from there. Amazon actually did have respectable earnings, but the turn was already in. I put in about their field Prime Day. That's probably a personal thing. They advertised their Prime Day as going to be better than Black Friday. And then I logged on, and it was all like houseware stuff. There were some TVs and stuff, but nothing to compare to Black Friday was totally dumb. And of course, Best Buy is now doing their own little Best Buy Black Friday thing. So, and I did look there, and they do have, of course, Best Buy is more technology, so they do have some tech stuff there. I did want to point out, initial claims this week was the lowest it's been since 1973. So, amongst all the negative of the market pullback, there was a little positive news in terms of the job front. So let's go ahead and pull up the charts and take a look at what they're going to tell us. Okay, so as we begin to look at our key support and price levels for the market, we're going to start off with the S&P 500. And of course, we started off with, last week showing you this beautiful uptrend that the market's been in. But we also talked about last week that the market had pulled off. If we have our trend line, going up here, something like that, you can see we pulled off and haven't really gone back to retest the highs. So here we are. We certainly have entered a nice tight channel, and there's the reaction of the last couple of days of this particular week. So, long term we're in an uptrend, but we're certainly consolidating at this point. And you can see, and we talked about this basically since February, we've been in this up and down motion. We're breaking through the 20 and the 50 moving average. We basically closed at the 50 moving average, could possibly run down and hit the 200. And we can see the last couple times the 200 has been our saving grace. Bouncing off here, bouncing off here. So we'll see what happens the next time we come down. But of course, you can see over here we have violated 200 moving average. So definitely a sideways market here for the S&P 500. Switching over to the NASDAQ. Still a little strength there. I mean, yes, we haven't hit the top of the channel in a while also. but not that same choppy motion that we've seen since February. Here's February, and there's actually still some up move here, some higher highs for the Nasdaq. And of course, as you'll see in a little bit, Amazon, is our outlier stock for the most part for everything. So we got some support, we got some resistance. I'm still going to say sideways. Volume picked up, obviously, but Nasdaq certainly is probably the strongest of our three major indexes as we switch over to the Dow Jones. Dow Jones has been going sideways even longer, going all the way back here to December. You can kind of see it's been in and out of this channel here. The key is the Dow Jones is actually at the bottom of the channel, and it's below the 200 moving average. So could it be moving lower? Isn't Apple now a part of the Dow Jones? It did act as support a couple times, but we've gone through just like the S&P, and we're actually already through it here at the end of the week. So a little concerned about some weakness here for the Dow Jones. If it's going to bounce, now is the time to bounce. Now, when we switch over our market leaders, let's go ahead to Apple. And you can see that Apple is doing that same consolidating we were just talking about with the S&P 500 and the Dow Jones. There's our earnings right here. Where do we go? From 130 down to, well, it's not as bad as I thought. Of course, with all the splits, it's not what it really was. But certainly some sideways price action. Hopefully the 200 will act as support. Sideways on Apple. Amazon, our outlier. Look at that. Look at that. I was talking to a friend, and he was talking about he bought Amazon just for earnings. Of course, rule number one is you don't buy a stock just before earnings. He lucked out. God bless him. Amazon's still bullish. Facebook still moving up nicely. Sort of a rising three pattern here. If we can break above the highs, that's something to look at. Of course, we got that psychological factor of $100 that we weren't really able to break. What did we get here? Today we got it got all the way up to 99.24. Got all the way up to 99.24, and that was that Tuesday. So once we break that psychological barrier, you might see some movement. But for right now, I would say sideways to up. Google. So we got three right there. Google, Amazon, and Facebook, all kind of outliers of what the market's doing, that sideways price action. They're actually moving higher. Goldman Sachs, strong from the standpoint, it's not starting a sideways price action way back here, but it has come up and kind of consolidated here for the past month or so. So it'll be interesting to see sideways on Goldman Sachs. But it is way above the 200, and the 50 now is acting as support. So that's definitely stronger than the market. Netflix, another strong one. So our market leaders are doing well besides Apple. Our market leaders are all pretty much bullish besides Apple. Let's go to Priceline. There's another one. Priceline's kind of sideways, kind of got a rising wedge going on here. So what do we see from that? We see the market as a whole sideways. The Nasdaq is the strongest of them all, and we can see that by looking at Facebook, Google, Goldman Sachs, Netflix, all stronger than the rest of the market. I almost forgot our little, what we call market internals. Let's look at gold. Look at that weakness in gold. Certainly, actually, this is a stock in gold. Let's scroll down here. I'm sorry. To the bottom. There we go. Gold. Definitely some weakness in gold. Crude oil, some weakness there here. You can see matching up with some previous lows, so we could go down and test 42-ish if we break below here. I wish the gas, because gas has really been the same for the past couple months, even though the crude oil is going lower. And finally, the dollar. Dollar's consolidating, showing some strength here recently. Let's see if we were breaking this trend line here. Not yet, so that's good. So a little strength to the dollar, little strength. You can mess with this high, you can mess with that high, you can mess with highs. You guys all know drawing your trend lines are all subjective. So, but regardless, you can see a rising strength here to the dollar. So, going forward, what should we see this week? Well, I think the market as a whole is going to be looking towards the FOMC announcement on Wednesday. Of course, will we see a continuation of the push lower that we saw the last several days of last week? Or will we see some valuation buying, meaning that, now that we've got a retracement, will people look to buy? Or do they think there should be a bigger retracement? Overseas, we've got Canadian GDP coming up this week. Also, we have GDP for us, America, on Thursday. But again, the FOMC policy on Wednesday could be key. They spooked the market a little bit about saying that by the end of the year they're going to raise their rates. So anything along that, especially if they actually raise rates this week, is certainly going to be impactful. But if they say something that says, maybe not, especially after the market pull back a little bit, will certainly be bullish at the market if they say they're not going to raise rates later this week. So those are the key things we're looking for this week. Now, in our education spotlight, we always like to talk about defining your edge. What your edge is your advantage. It's how you can beat the market. You can't just trade a trade. You have to trade what you're good at. You have to trade your edge. If you're a baseball, fastball pitcher, you got to foul them off until you can get that fastball to hit out of the park. So, one of the things I like to do, especially back when I was trading stocks all the time, I used to be with Better Trades. I forget her name, Diane something, and she used to talk about her basket. And so if the market is up, you trade these stocks. Like we just did. We went through those stocks. We saw all those somewhat bullish stocks, Amazon, Netflix, Goldman Sachs, Google. So if the market's up, I may trade those stocks. If the market's down, you maybe Apple's going to continue to move lower. You have 10 stocks. If the market's down, these are the 10 stocks I'm going to look at. If the market's up, these are the 10 stocks I'm going to look at. If the market's doing sideways, maybe I'll trade options for the day, especially with weekly options now. You don't have to wait for a whole month. And maybe you'll just say, if I don't like what I see, I'm just going to go out and play a round of golf. Instead of gold, that should be golf. So, again, we want to make sure you guys check us out on YouTube, Facebook, and we're also on Twitter. Although, I'll be honest, I'm not much on Twitter as much. Move Up with Mike on YouTube. Learn the Truth About Money on Facebook. And again, we've got this great relationship with Top Step Trader. They pay you to trade. You keep 80% of the profit by trading their money. They've got a great program. Check them out. michaelglass.com/pay-to-trade.html. As always, guys, it doesn't matter what you do to improve your trading. If you can't pull the trigger at the end, it doesn't matter. Thanks, guys, and I'll see you next time.